Joining us today from our studios in Boston, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Oh, amen. I am here. I just hadn't clicked all the right buttons. All right. Well, Okay, let me grab everything then. Hang on. Me, screen. Yeah. No. And it was, I mean, it was tough trading today. I'll go through it all, but there was so much chop. And, when I was trying to keep everybody out of the trades, really, when something good set up, I'd let them know, but there was really nothing good for the last hour this morning. There was maybe one trade, and I think it was a break even. There was one crude trade that was a good one. But that took forever, and and I should have been out of it, but I was just reading the DOM, and I was thinking it was gonna move, and it did. It got to where I thought it was gonna go, but it was 36.11, I think, is what I thought it was gonna go to, and I think I got out at 36.09, but. That's yeah, I know. It's like house arrest. But it really is. It's like house arrest. It you know you're not supposed to you're not supposed to go near anybody, go see anybody, do any of that stuff. You know, yeah, that's gonna happen. You know, if it's part of the United Kingdom, and the the Commonwealth, why not lock them all down? I've been to all those places, and yeah, well, we have one this week. Yeah, take away their money, then they'll just have to make money on fees. It's crazy. Okay, All right. Joan says she only hears me on YouTube.
Yeah, sorry about that, Joan. Thanks for the heads up. I fixed it. Thank you very much, Joan.
Okay. All right, here we go. Good afternoon, everybody. Today is Monday, the 2nd day of November, 2020. And happy birthday to my sister and to Macy. Today we made 12 ticks in crude, 4 ticks in gold, 2 ticks on the ES. It was tough trading today. I'll get into it in just a few minutes. But so we're up 185 on the morning session. Today it took 44 minutes and 5 trades to get to the goal for the day. At that point, we're up $105 a contract, and we took a total of 9 trades this morning. So, it's the first day of the month. It is our 179th consecutive day of getting the goal. Okay. And on the year now, we're at $87,873. That's over 204 trading days, averaging $430 per contract for a 2-hour trading day. Now, my goal for the year is to get that over 100 with 1 contract. And, if you can do it with 1, you can do it with 10. All right. So if you are not part of the CFRN family yet and you want to become part of the CFRN family, go to the homepage at eminifuturestrading.com. eminifuturestrading.com. And there you will find all the information that you need to become part of the CFRN family. We have made it easy and affordable, given the times that we're in. All right. Let's jump into it here. Now, I had 9 trades this morning. Most of them were break even. But once I saw what the market was like, I realized that I'm going to have to start taking the little pieces. All right. So this run right here in the pre-market, probably one of the best. There was really nothing going on right through here. The YBR trades were working out. You see how we had bullish separation, blue on the YBR and an up move. Red on the YBR, bearish separation and a down move. Red on the YBR, bearish separation and a big move down. So the YBR trades were kind of kicking it this morning, while the regular trade setups, this one right here, I had like 8 ticks profit in it. And I was looking for the target on the day, and then it just destroyed me. I actually locked in 2 ticks, but it slipped me to break even because this move right here was all in 1 second. You see that down at the bottom? Oops. This was all in 1 second. And it slipped me 2 ticks, but still I got out. Anyway, more YBR trades right here. Then we had a trendline trade right here that we picked up 4 ticks on. And we had a break-even trade there. And I believe that's all we did with gold this morning. Yes, it is. Okay. The euro, we didn't do anything with. And you can see it was just a choppy mess. The whole thing was just a choppy mess. YBR trades were okay. We had blue with an up close, bullish separation, red with a down close, bearish separation. So the YBR trades are working out fine. But the regular trade setups, we just didn't have any. And crude oil, crude had a couple of nice spots. This was at 10:30. I had stepped away at 10:30, and I missed those 3 trades right there, which were trades that would have worked out just fine. But to start out with, though, our first trade on crude was right here. We picked up 4 ticks on that. Then we had a break even. I missed those. Then I picked up 8 ticks here to put me at plus 12 on crude. During the break, we didn't really get anything during the break. Okay. Again, the YBR trades, they were working out. on the ES now. Just go back. How many ES trades did I have? You see how choppy it is in here? Okay, so once we got started, looks like we had a break-even trade there, +2 on this one. We missed that one. Now again, the YBR trades we're working on. And there, and there. We got 2 on that one, and scrolling to the next one. You see, I was hesitant to take any trades this morning because it was so choppy. We had a break even on that one, and I believe that's all we did. Yeah, you see all that chop. Ugh. Now the YBR trades, again, well, there was one here, and one here, and one here, and one here. But that's all during the break. The markets today were just a mess and really hard to trade. So I certainly didn't want to overtrade. No, and I didn't want to get down on the day. I just wanted to get my goal. And so I did. Okay. Back to the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 12 ticks on crude, 4 ticks in gold, 2 ticks on the ES, put us up 185 on the morning session. Today it took 44 minutes and 5 trades to get to the goal for the day. At that point, we're up $105 a contract, and we took a total of 9 trades. So on the month, obviously, it's the first day of the month, so we only have that. But we did hit our 179th consecutive day of getting the goal. Now, on the year, we're at $87,873. That's over 204 trading days, averaging $430 per contract per 2-hour trading day. Now, if you want to become part of the CFRN family, we have made it easy and affordable. All you have to do is go to EminiFuturesTrading.com, EminiFuturesTrading.com, and just follow the instructions. It's self-explanatory. You become a lifetime passport holder or a weekly passport holder, whichever one you want to do. Okay? All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, looks like you are ready.
Yes, sir. Recap of the recap.
Today, 44 minutes, 5 trades, $105 a contract. 5 trades, $105 a contract. Let me see, is Ryan in here?
Now,
Yes,
guys,
Ryan
what goes
is.
on in the morning in the room with Michael, everything he just walked you through, the recap, right? This is where we train you, teach you our methodology, our strategy, and our indicators. It's a very simple strategy. But as a passport holder, you can go to class 5 days a week until you've learned enough that, you know, maybe sometimes you pop in to hang out and shoot the breeze, or you just get up and get your points and get on down the road. So for 2 hours a day, Michael teaches you the strategy, and then around the clock, I use the strategy to send you actual trade alerts, actual trade setups. We opened last night at 6 p.m. Eastern, Globex did. And since the Globex market opened last night, here's where we are as of 11:30 a.m. today, since 6 p.m. Eastern last night. 23 total alerts, 6 never triggered, still waiting on 4. 13 actionable alerts, 2 of those were stopped out. based on not risking more than $300 per contract per trade, which represents 15% of actionable alerts stopped out. Now, 15% is a great number, but the average is 20% on a weekly basis over the last 118 weeks. Now, when those trades are coming at you in the channel, let me show you what that looks like. Now, this is the Logic 247 round-the-clock Emini alert service. We have another alert service too that's part of the passport, and I'll explain that to you in just a moment, in case you don't know. Last week, week 117, we had a total of 45 alerts, kind of a slow week with only 45 total. 4 never triggered. We had 41 actionable alerts. 5 were stopped out, 12%. Now, that's for the week, but that's not a typical week. A typical week is 20% stop out. So last night at 6 p.m. Eastern, we began week 118. And the very first 2 coming out of the box got stopped out. And they were just little simple gap fill trades. I mean, painful. But then things got better. The third alert to come out last night was a long on gold. And at the time, Valerie did the recap and measured this. If you were trading one contract, you would have been positive $680 per contract traded. The next was a short on the Russell. That one was valued at $200 per contract traded. Here is a short on silver, $550 per contract traded. That one never triggered. NQ, $200 per contract traded. There's a hedge on the NQ that never triggered. There's a short on the Dow, $340 per contract traded. No trigger, no trigger. There's a short on gold, $70 per contract. No trigger on the ES there. A long on the Dow. This one, $1,810 per contract traded. Now, I really want to make sure everybody understands. Every passport holder got each and every one of these alerts as they came out, live in real time. And I always make sure you have plenty of time to get to your computer. Once you get the signal, you got time to get to your computer, get to your charts, check market structure, get the order placed. Okay, it doesn't have to be a mad dash kind of thing. This one alert, buying the Dow, $1,800 per contract. Think about that. Now, you can get a passport for $97 a week. And you can pay $97 a week for life, or once you're comfortable, you can just immediately upgrade to the lifetime passport, and you never have to send us or anyone else in this business any money ever again. In fact, don't you think it's about time Chicago started wiring you some money? Now, that thing works both ways. Here's a long on silver, $175 per contract traded. Here's a Russell, long at 1547. It hit a high of 1564.90. Our final target was 1560, so it overshot the target by a bit. $895 per contract traded. No trigger. Here's a long on gold at 1888. This worked out to $380 per contract traded. And now,
Wayne, would you just take a second and let Mike asked a question about how we arrive at the value.
yeah,
That's just the value of the swing high, Mike. No one's saying that our traders were able to get out at the swing high. It's just our way of quantifying what the swing high was in that move.
that's what the market made available. Not everybody stays in a trade to the second and third and fourth target. In fact, most of the new people in training, once they get their 2 points for the day out of the S&P or the equivalent in a different market, they're done. Because the idea is when you start, before you go live, you need to do 10 consecutive days in a row in the simulator where you reach your goal in 10 trades or less. Only then does our blueprint give you the green light to go live with one contract. So the point being is if you enter here, initial target, final target. So if you got in at 1888 and you got out at 1890, this was $380 per contract traded. If you had bought the S&P at 3301, this one ran all the way to 3308. $375 per contract traded. Now, this was the final trade to target, but I also teach all of the students to, after the initial training, if you're in a perfectly good trade and you hit the final target on an alert, but the chart shows no sign of weakness on a long such as this, I teach you not to jump out of a perfectly healthy trade, because we wait for these high probability, low risk opportunities. So I don't want anybody to get caught up in trying to milk the last tick out of every trade. But if there's no sign of an exit signal anywhere close, if the chart itself gives you no valid reason to exit the trade, then this just becomes a number. So it went an additional 4, let's see, this was a long, so this one an additional 4.5 points. Okay, all right. So this one we're still waiting on, still waiting, still waiting, still waiting. Those are ones I just put out this morning. Okay, and so the times that you see here are now Mountain Standard Time. Arizona does not do daylight savings time. So 8 months out of the year, I'm on Pacific Time. 4 months out of the year, I'm on Mountain Standard as God intended. Which really makes it a little confusing for me. About time I get used to it. Well, the eight month one you get used to, but the 4th month, anyway. So, if you're watching this video, if you're not watching live right now, maybe you watch it later this afternoon, and you're trying to measure up this to here, you need to know this is Mountain Standard. And I have no control over that because the messaging app Telegram that we use to send you the alerts, it reads the computer, or the clock on your computer. So whatever time zone you're in, whatever time it says on your computer, that's what time it's going to say in Telegram. So now, and you have to hover. See, Sunday, November 1st, 8:54 p.m. Then it got edited this morning when Valerie recapped it. See, if you hover, you get the whole, any edits, all that stuff. We bend over backwards to be as absolutely transparent as we know how to be. So these are all just rolling in, okay? You should never feel obligated to take a trade just because it's an alert. You should go to your chart. Make sure you see the trade. Make sure you understand why it's a high probability, low risk opportunity. Because again, our goal is to teach you how to find these yourself. So 2 hours a day, Michael teaches you how to find these, and around the clock, I find them for you and send them to you so that you can get going while you're learning how to do it yourself. Because that has to be your ultimate end goal. If you found the best trade calling room in the world, I mean something off the charts, like, only 20% got stopped out or something, that would be huge. But what happens when those guys step in front of a bus? By law, Michael and I aren't allowed to fly on the same plane. Just kidding. A long time since I've been on a plane. So again, 2 hours a day, we teach you how to come up with this yourself. And around the clock, I send you these as opportunity presents. And you can choose to trade or not trade any alert. But you should always look at the chart first. When you first start with us, you must trade in sim. We can't come to your house and make you trade in sim. But I'm going to tell you now, if you don't put together 10 consecutive days in a row in sim before you go live, you're going to wish you had just donated that $5,000 you blew up to some worthy charity. I'm just being very honest with you. Okay? Trade in sim, it's like an open book test. I mean, I'm kind of laying it all right out for you, but we want you to learn how to do it. Okay? Now, I mentioned that there are two different alert services. That one is spinning around the clock. The other one, the original alert service, the one that we did, we're in our 7th year, we did a 3-year public beta on Twitter. All the data's out there if you ever wanted to go and check it. I would encourage you to, if you have an interest. Now, the Concierge Trade Alerts, they don't come out around the clock. These are issued once per session, right after the Globex open, as soon as I can. I have to let Globex open, I have to do my computations. And what you do is you take these numbers and you go to your chart and you put a line in the sand at 3,300. You put a line in the sand at 3,220. And that helps you develop your sentiment for the session. It helps you build your narrative. If we hit 3,300, we want to be long, and we only look for longs above 3,300. If it goes the other way and we hit 3,220, we want to be short, and then only looking for shorts as long as we stay below 3,220. Everything in between is the market trying to make up its mind. If you want a screenshot of this, the simplest way to do it, built into Windows 10 is this little tool. It's called the snipping tool. I always have it open on my taskbar. New. And then you just hold down the left mouse button, drag across, release mouse button. Now you've got an image that you can send as an email, you can copy and paste it into a message in Telegram, you just save it, you do with it whatever you want, it's yours. Okay? Alright. Now, let's go to the chart. I want to go to the daily first real quick. That is the all-time historic high in the S&P 500 Emini Futures. When price pulled back to the BBC, it held for a few days, finally gave way. We got a bearish cross. This green line is called the BBC. It just means bull, bear, cross. When price crosses above this green line, we're bullish. In other words, we're looking for higher prices. When price crosses below, that's bearish cross. Now we're looking for lower prices. Now we're looking for higher prices. Now we're looking for lower prices. This other line, the red and blue line, the official term is CFMA1. I call it blue and climbing. I know I'm looking at longs, looking for long opportunities. Red and falling represents resistance or bearishness. You always know what the next high probability move is. Okay? Now, this morning in the live training room, I explained to everyone we had a bearish cross overhead. We've got this kind of a little wacky double bottom going on here. We actually have a higher low, but as you see, as price tried to bounce off of this 24% fib right here, okay, it ran into resistance exactly where we would expect it to, at the step line and red and falling. When price rises up to red and falling, it often turns into resistance and sends the market back down. Okay. On longs, you'll see price just climbing the back of blue and climbing. So above the BBC, you're looking for longs. Below, looking for shorts. Also looking for the complement of blue and climbing or red and falling. Now, what I just explained to you about this daily chart, and the larger the time frame, the more important the information. I put out a big picture silver alert last night. I'll go over with you. That's based off of a monthly chart. Okay, so, but monthly, daily, weekly, 1 hour, 4 hour, 30 minute, 5 minute. Even that fellow the other day who uses the 30-second candle, which TradingView actually has now. What Michael and I did is, in the beginning, like any trader, we had to, uncover some secret. We had to figure out a way to quantify and see and understand and know something that other people couldn't see, didn't know, so that we could exploit that. That's what we thought trading was all about. We found out we were wrong a few accounts later. And so we owned every indicator on the planet. We had rolled a lot of our own, but we realized we were heading in the wrong direction. So instead of adding just one more thing, one more filter, we started to get rid of stuff. We broke it down to the stuff that matters. And the stuff that matters is the BBC, blue and climbing, red and falling, and on the smaller time frames. We use a slingshot. Now, the slingshot can be applied to a larger time frame, such as a daily. And what is this telling us down here? This white line is what I call the 50-yard line. Okay. Now, just as red and falling up here is bearish, red and falling here is bearish. Green and climbing is bearish. If this red extends below the 50-yard line, that could be that would be a strong indication that you would have more confidence in continued lower prices. I mean, how low could we go? If this position we're in right now doesn't hold. Because you see, we have resistance overhead at the step line and red and falling, that's resistance. Then you got support right here at this swing low. Price could ping around in here for a while. In fact, when I drew this last week or the week before, I said, guys, we could ping around inside of here for quite a while. Well, that looks like quite a while for me. These are daily candles. Now, everything you've heard me say about this chart applies to every market, every time frame. That's where Michael and I did something that's truly unique. These are called auction style markets. You got buyers on the bid, sellers on the ask, price channeling back and forth. So in that environment, there are certain principles upon which the market operates. So rather than trying to outrun, outfox, outdistance, outsmart the rest of the world, the different direction we took was, let us understand what the market's trying to do at any given point in time. A lot of trial and error, blood, sweat, and tears has delivered what you have right in front of you. That whole string of alerts that I just went through. Okay? All of that, it's not because we outsmarted anybody else, out-traded anybody else. We simply know what the market is actually doing right now and what its goal is. What is it trying to accomplish? Market price is always trying to accomplish something. Even when it's consolidating in a channel, it's got a plan. During the consolidation, you've got to be patient so the market shows its hand. Then you can begin to build the narrative and put the trade together. So we're teaching it to you 2 hours a day, and then 2 hours again on Thursday night. That's our workshop. Plus you've got 2 hours with Michael, and of course the 2 hours here in the afternoon, where you may also ask questions. Let's see. Alan had a question. On the Concierge Trade Alerts, we can trade those multiple times when appropriate. Yes. Should we be looking to trade the logic trades multiple times, also, if re-triggered? Well, you got to answer that question like this. You've got to decide who you want to be as a trader. You could be the guy that comes in and, works 8 hours and just tries to trade every opportunity that comes along. Or you can go the other direction, which is, my goal is to take 2 points a day out of the S&P, or 10 ticks out of crude, whatever. And once I reach my daily goal, I'm done. And as your account size builds, once you've earned $2,000 after going live, that you use that $2,000 you've earned, your profit, to underwrite a second contract. So now you're trading 2 contracts. So those same 2 points a day just went from being $100 a day to $200 a day. The blueprint will let you know when it's time to add the next contract. Don't feel obligated, but just know it's okay. When you go to 3 contracts, then it's $300 a day. By the time you hit 10 contracts, it's $1,000 a day, which puts you in the top 3% of wage earners worldwide. But I can promise you this: if you try to jump the line, if you try to cut corners, if you don't put in the time, in sim, doing the 10 days, you'll probably end up being one of the 9 out of 10. Okay. 9 out of 10 new traders fail outside of our walls. These numbers, we don't, that's, anyway, it's, and what a shame. What a shame. Because these 9, probably good people, most of them anyway, they had plans and aspirations, but they didn't have one thing. They didn't have someone to actually teach them the underlying principle of the market and then teach them how to trade that underlying principle. See, I used to think that I had to be able to see something that no one else could see. When in fact, I need to see what the most people are seeing. Because then the next move, it's like a self-fulfilling prophecy. So let's go to a 30-minute chart of the S&P. Okay. All right, last night, let's find the Globex Open. Globex Open was this candle right here. No. Yes. Oh, I got it. You know what, guys? I've got to go through and change the time on all my charts. I always keep my charts on Eastern time. And the way you do, if you're in my situation and you have to do this, you see this thing I just opened over here? See the little blue guys? Pop it open. You rascal. Come on. Work with me. All right, There we go. Scroll all the way to the bottom. Now for me, I need to change UTC to 5 because remember, Arizona doesn't do daylight savings time. So I've got to put myself on Mountain Standard Time. Now the current candle started at 12:30. Okay. So when you see my charts after I fix them all today, and if you look at any of the videos going back over the last 5, 6, 7 years, and we do record this show every day, and it's available on YouTube. So, you know, whatever you think of our track record today, go look at what we did last week or last month or last year or 2 years ago. Because, you know, anybody can have a good day, anybody can have a good week. I suppose anybody could have 118 good weeks, then it all goes to heck in a handcart. Hope not, but, you know, embrace all the possibilities. So that's how you change it down here. So now this chart is set to East Coast time. So now when we go look for the Globex Open last night, 1800 hours, see it on the chart down at the bottom, 6 p.m. Eastern. And this was my thwarted gap fill. I don't know how much we missed it by, but we missed it. So as you saw the 2 X's when we went through the recap, that got stopped out. But we also, along with that Logic 247 alert, which was a trade alert that gave you the numbers to trade the gap fill, on index futures, the gap almost always fills in the same session, usually within a few hours. And the only time we get gaps in index futures, because they trade around the clock, is typically Sunday night and occasionally in earnings season when Globex opens. Okay. So last night you'd have gone to your chart. Once you got your static report, concierge alerts, you'd come over here and you put your line in the sand at 3,300. You might want to use a straight line. All right, so let me drag this down. Are we there yet? All right, by 3,300. Now, the Concierge Trade Alerts were issued last night at 6:20 p.m. Eastern, 20 minutes after the open. This trade did not trigger until 4:30 a.m. Eastern after the London session opened. Okay. We have traders around the world. We service all continents, all time zones. Now, another thing, important prices, important areas are almost always tested. So from 3,300, we ran up to, we'll call it 3,320. Or 3322 and a half. Just call it 20 points. This move right here, S&P pays $50 a point, is a $1,000 per contract move. Now, if you once you've earned the right to trade 10 contracts, well, you can do the math. Okay. As we trigger, all things are as they should be. Down here, we're blue and above the 50-yard line. We're above the BBC. We're climbing the back of blue and climbing. And there we go. Okay. Now, important prices, important areas are almost always tested, so price pulls back to the BBC. The pullback holds more often than it doesn't. We get another trigger. Now, on this one, you have to be a little more careful Because if you go long again at 3,300, right, you've got red and falling overhead. That could stop price in its tracks. What we ended up with was a little double top here. So there's $1,000 per contract here available and 1,000 available here. But I would, if I were going to take this one, I would be looking to take profit, before I touch red and falling. And red and falling did its job. It drove price down. It's now put price back below the BBC. So since the session opened, we went from above the BBC to the below, to above, now back below. But this candle hasn't closed yet. We still got 5 minutes left in the life of this candle. This week we have a weekly trading zone at 3304/05. But when the Concierge Trade Alerts went out last night, I do those first, and then I do the weekly trading zones. Those come out to our traders at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. If you could only have two things on your chart, at least for me, the two most important things would be our weekly trading zones, the BBC, the market. I can navigate the market that way. If we close below the BBC, then we're going to have a window of opportunity from about 32.80 to about 32.70. $32.80 to $32.70. I'm not putting this in the channel as an official alert. I'm just want to kind of help you understand how the strategy works. Got red and falling overhead, prices back below the BBC, so if we're below the BBC, we got to be anticipating lower prices. Until when? Until we get back above it. Now, when this next candle opens in 3 minutes, that thing's red. If you got a new candle right now and it was red, once you take out that low, you could probably enter at 32.83. But I like to be a little more conservative. You see this window of opportunity? It's all inside that one candle right there, where we blasted off from. So right now, the highest probability move is if this candle closes below the BBC and below this previous swing low. When the new candle opens, we're on a 30-minute chart, and the new candle goes red and takes out this low, then here's a 10-point window of opportunity. At $50 a point, it's $500. But you see how price here, okay, price is moving up, and then sellers tried to take it lower, but they couldn't get it back below this point. Earlier in the session we were, but on this try, they couldn't do it. Okay. So I've got what's probably, if price gets down there, potentially some pretty good support. If that fails, this bullish cross, that would be the next level for support. Okay. So why do I say 32.80 to 32.70 if it's really, 32.67 or something? I always build cushions in on each side. All right. Now, the next weekly zone below us, what is this? Yes, 32. we have a zone, a weekly trading zone, that everybody got this morning at 3266. 3266 slash 67. You see that? WTZ 3266 slash 67. So we take out this low, we take out that low. This is just, there's no visible obstacle to prevent price from falling. Price travels from support. Price travels from support to resistance, support to resistance to support. I would have thought we would have found support here on the pullback to the BBC. And as you can see, the candle's green. We might. So I would take no action until either price gets above red and falling, or this little area that I carved out for you here, right there. Trading's not easy, but it can be that simple. Now, I didn't need a MACD for that, or a stochastics, or the tricks or the trend, or the advanced decline line, or any of the other tools. Not that those are bad tools. I'm sure they all do what they're created to do, but they don't help us because we do things differently. Remember, our strategy is based upon the underlying principle upon which the market itself operates. So all we're doing is just mirroring, to the best of our ability, what the market is doing. Not trying to be real clever and outsmart anybody or outsmart the market, any of that. Now the short side for the S&P was 3220. 32. So that's way down here. This would have been the other line in the sand. Okay. Remember, the alert said either be long at 3,300 or short at 3220. Okay. So we had two nice 20-point opportunities. We had a 20-point opportunity. And as I said, I would have gotten out of this one before it touched red and falling. So I would have not caught that part of it, probably. Okay. Now, see the last line of defense. You see this swing low from the previous candle? Follow my horizontal line on my cursor. Follow it left. Do you see it? Now those last three swing highs, they don't line up perfectly to the tick by any stretch. But what they do is they create an area. Okay. So if we can get below this area, the next area is down here. And so we're looking day in, day out, round the clock for just such an opportunity as this. If you missed last Thursday's show, if you go out to YouTube, for some reason, YouTube didn't record it as normal, and so Valerie did upload it. That show was 4 hours and 40 minutes. It was Dr. Tom Day. But the final hour of last Thursday's video, just when you go to youtube.com/CFRN, just look for the video right at the top that says 4 hours and 40 minutes. And you don't have to watch the whole thing. But if you'll scoot up to about the final hour, we have a setup just like the one just like what I did here. And we brought in a multiple time frame. We also used the 30 and the 5 minute. And we spent about 45 minutes watching the trade do what we thought it would do. Price always has it's on a mission. Price is always trying to get to a weekly trading zone. It's either trying to get to the zone above or the zone below. If price is above the BBC, it's trying to get to the zone overhead. If it's below the VVC, it's trying to get to the zone below. So we got one at 32.38 / 32.39. 32.38 / 39. Now I anticipate support here. Okay. Number one, market structure. Number two, we got a weekly trading zone there. And when price falls to a weekly trading zone, we expect it to be good support until proven otherwise. So hitting this area, we would anticipate a bounce. But once we get below that low and that low, I have nothing obvious to prevent me from getting to that zone. That doesn't mean there's a guarantee it's going to go straight to the zone. But it is the next high probability move for the S&P 500 E-mini Futures. So when you learn to read the chart like a newspaper, when you're able to spot these opportunities yourself, you're done with all the gurus and all those emails and all those websites that make you a lot of promises that most of them fail to keep. All right? So whatever you've done in the past and whatever results you've got in the past, you're going to keep getting, if you keep doing the same thing, you'll keep getting the same results. Now, what I don't mean is that every day you try something new. You find something that works, that has stood the test of time. This, what I'm showing you right here, we haven't changed a rule, we haven't changed a line of code, I think about 8 years now. I think it's really even more. If something's not broke, don't fix it, don't tinker with it. And because of the way it is designed, the only way it could break is if the market breaks. The only way it could stop, quote unquote, working is if the market stopped working. Because this is just putting you as close to the metal as you can get on exactly what the market's doing. Okay? Now, we had these two here, these two 10-point runners at the Concierge Trade Alert. Now let me jump back over to logic real quick. So I really want to make sure you guys get this. Because I know some of you are out there, you're sitting there, you're freaking out, you're going, man, I've spent 50 grand on this stuff so far. I don't know if I can go another $97 a week. Well, it's just because you don't understand. And that's okay. And at this point, you should be skeptical. Very skeptical. That's why we're transparent. So you don't have to wonder. We put the alerts out before they trigger. Michael puts on and takes off trades 2 hours a day while he's teaching you how to do it. So we got no place to hide anything. There's no man behind the curtain. Or perhaps you could phrase it another way and say that we bring you behind the curtain with us. So back to you, Alan, and your question. Do we trade Concierge Trade Alerts multiple times? Yes. Once a Concierge Trade Alert triggers, there's a greater probability that it will re-trigger at least once, often more. There's a higher probability that it will trigger again than not trigger again. Okay? But when I said you have to decide who you're going to be as a trader, I mean, if you nabbed your 2 points right here and you're done for the day, you're done for the day. That's how you're going to build your business. You may choose to build yours differently. Okay? So we give you all the ingredients, a cohesive package, 24/7, around-the-clock support. And I've been told we're nice people. So who knows? We'll see what happens next. We'll come back and check on this. I got to pick up the pace here and get this done. Let's go to the Dow. If you have any questions, put them in the chat box. I am happy. Oh, no, I wanted to show you. So everybody understands that was a concierge alert to be long 3,300. Let me scroll back up. Now these are the ones that come around the clock. Okay, so you got two alert services. This first one was 3270 to 3275, 3278. We went from 3270. I mean, we did exactly. We filled the gap. It just pulled back a little more than what we're willing to risk. This is based on not risking more than $300 per contract per trade, based on a three-step methodology that I teach you based on market structure. We just don't put $300 on every trade as a risk, because each trade is unique. I teach you how to read the chart, and then the chart tells you where to put the stop loss. And if it doesn't meet that criteria of $300, then you pass. Wait for it to trigger again. Look at a different market. Okay? Now, because we trade every market the same, once you understand our simple strategy, you can use it to trade the S&P, the Dow, the Russell, the NQ, gold, crude, pork bellies. Because remember, they're all auction-style markets. Some people will tell you, hey, don't fall for that. You can't trade gold and soybeans or the Russell. You got to have different strategy. You got to have different indicators. I bet those people have some of those items for sale. Because what we teach you is not how to trade the S&P. We teach you how to trade. If you choose to apply your knowledge to the S&P, that's fine. If you choose to apply it to gold, that's okay too. If you choose to apply it whenever and wherever opportunity presents itself, well, that's okay too. So, the gap filled, but stop out was at first. Same thing on the Dow, right? And then I'm looking to see if we had another ES long right in here. And for ES, okay, that one never triggered. Here we go. This was an ES to be long at 3301. Now, when you have a logic alert that aligns with a concierge trade alert, concierge said be long 3300. Logic said be long 3301. So when you have two different methodologies pointing at the same important price, important area, that's typically a very high probability opportunity. And two 10-point swings off the number, I'd say that's a good spot. Okay. The logic alerts are based on current price action. Concierge is based on historical price action. The market loves to repeat itself. When current price action lines up with historical price action, it's like a self-fulfilling prophecy. I just have to teach you how to see it. Michael, in the morning, he teaches you how to see it. When you book a one-on-one mentoring session with me, which is included with the passport, that's what I help you to see that, to understand what's happening. Okay, all right, let's go do a couple more markets. We'll come back and see what happens. And you know what? If it doesn't make it to 3270, that's the truth about trading. All professional, profitable traders get stopped out most every day. But it doesn't concern them, because they understand that they got to get through a couple of stopped out trades to get to some profitable trades. Breathing is as much a part of life as stop outs are a part of trading. And where so many new traders fail is they spend all their time and treasure trying to figure out some way to not get stopped out. But there is no way to not get stopped out, except not use a stop. But you can't do that. Let's see, question here. Confirmed 3280 window with a pullback on 5 minute. If you want to. Do I have a 5 minute chart running? It's a good question. Okay. We do believe in multiple time frames here. So that window of opportunity that we just drew on the 30-minute chart, 3280 to 3270, this is what it looks like on a smaller time frame. So the question that Tim is asking is, as we come down and get to this important price, important area, should he just trigger right in, try to catch the 10? Or should he wait for price to pull back? Because price always reverts to the mean. And our mean just happens to be green. It's called the BBC. Price always comes back to it. It's like home base. Goes out on a journey, comes home. Goes out on a journey, comes home. Goes out on a journey, comes home. Price always comes home. Reverts to the mean. Now, while waiting for a pullback here, might be the most judicious thing to do, there's not a guarantee that you'll get a pullback. You got to take into consideration how far we've already dropped. We've already dropped from, I don't know, 3303 to 3282. Could it drop that much more? Well, did it really rally all the way from here to here? Yeah. So then to ask, could it? Yeah. And once this took off over here, did we ever catch a pullback? No. So in the discussion group, I've been talking about this at night. You've got to start learning to make these decisions, okay? Trading is not about just trying to scrounge 2 points out of the market every day. It's about understanding this living, breathing thing, how it behaves, what causes it to act in certain ways and do certain things. And the trading world, all the vendors, you know, when you Google teach me how to trade, we did it the other day on the show. 455,000 results came back, right? But you've been there, and you've blown up accounts, and you may be gun shy now. So I would trade it, Tim, because just in my opinion, the probability of financial gravity kicking in and sucking it down, I think, is greater. I don't see any buyers pushing the envelope here. Okay, so I just don't know if we would get a pullback on this one. So unfortunately, I can't answer that question, but we can come back and look at it in a minute. Okay, looks like we're into the window. We call this a window of opportunity. Looks like we just touched the top of the window. So let's get through some of these other markets. We'll come back and take a look. And you're probably going, are you trying to say you go through that same laborious process with every alert that you issue? And I say all 5,586 of them. Over the last 118 weeks, I've issued 5,586 real-time alerts. over. 118 weeks it is now. All right. The Dow just getting busy. Guys, I talked in the room this morning about the counter trend, and I said I wouldn't put it out as a trade. And it was this right here. If I do this real quick on each chart, then it'll just be done. UTC 5. Okay. All right, so now my Dow chart is back on Eastern time. The zones you see on here are from last week. Just published the fresh zones this morning, so I haven't updated the chart yet. But look at what price did. Price came down to last week's weekly trading zone. To the tick. And almost made it to last week's zone overhead. Okay. Now, of course, passport holders, they've got this week's zones to work with, but there's a transition from last week into this week. So the zones from last week, and once we publish the zones, they're carved in stone for the whole week. Sunday night open, we're definitely using last week's zones. Specifically, up until I release the new zones at 6:15 a.m. Eastern. But you'll still see the zones from last week have an effect on price Monday, sometimes Tuesday. Well, occasionally we'll stumble across an area that is so important, a price so important, that we end up leaving that zone on the chart for a couple weeks because price just keeps going back to it. It's like center of gravity kind of thing. Okay. All right, let's run through the rest of these concierge alerts. All right, on the Dow, consider being long 26,550. Now everyone got the notice before price got to 26,550. The alerts went out at 6:20 p.m. Eastern, and we triggered right after the London Open, just like the other one. The index futures, S&P, Dow, Russell, and Q, they tend to run as a pack, with the S&P being the bellwether. Okay. So the alert said, come on. Must be a lot of volume flowing, because my charts were working just fine a minute ago. There may be a big move about to take place, guys. Let's just see. When my charts behave like this. All I wanted to do. Buy. 26550. All right. I know the line's crooked, but let's just live with it, okay? All right. So where's my dollar store calculator? We had a swing high up here at it's not going to give me a pop-up. 26,917. 26917 minus the entry price 26550. It's 367 points. The Dow pays $5 a point. S&P's 50 a point. The Dow's 5 a point. So 367 times 50. 367 times 5 is is $1,835 per contract traded. Now, when I went through that list and showed you on the logic, you know, what those different alerts were worth per contract traded, this is an entirely separate trade. Okay? But they go together like a hand and a glove. One's based on current price action, the other's historical price action, and the market loves to repeat itself. So we go from zone basically to the zone, back down to the zone, back up to the zone, down to the zone. Obviously, these zones on Monday are still holding sway over the market. Now the short side for the Dow, it's way down at 26,230. If you want to write it down, you can. I can try to draw the line. So we triggered, and the market made $1,800 per contract available. Now, okay, that was based on the swing high. How do you know to get out at the swing high? You don't. You don't know it's a swing high until after the fact. Think about that. So, what you gonna do, boss? We have what's called the exit signal, using our very humble indicators. This little black line is called the step line. See how it steps up and over, up and over, up and over. When price starts to walk sideways and the step line crosses blue and climbing, that's an indication that the market's running out of steam. So in a long trade, once the step line crosses over, the first red candle that closes below the step line is the exit signal. 26773. Exit signal. Okay. Now the exit signal can't get you out at the swing high or swing low. Nobody or nothing can. Okay. So that's that. So now let's do the real math. Let's say you took the trade, you got long at 26,550, but you missed the swing high. There was much wailing and gnashing of teeth. But you know what the exit signal looks like. And so you got the heck out on there on the close of this candle for the specific reasons I just laid out. Okay. So now we're going to use 26773 minus 26550. That's 223 points. The Dow does pay $5 a point. It's $1,115 per contract traded. That's if you entered here and exited at the exit signal. Now the Dow made such an incredible move to the upside, and on the pullback found support at the BBC and the WTZ. This one has not triggered a second time. Keep in mind, if price continues to creep down and we get below 26,550, we don't immediately start thinking short, because we know that it's a greater probability, since it's triggered once, it's a greater probability of it triggering again than it not triggering again. Okay. This would have just been a trade that you learn, pull back to the BBC, boom, you get long. Over and over all day long. Okay? So that's the Dow. Based on the entry and the exit signal, that move was worth $1,115 per contract traded. Owen says 5 points on the ES trade, got in at 32.83. Let's look at it. So okay, so you see how it came down in the window? Now it's pulled back up to the top of the window. Now, this is where everybody gets freaked out. Second I get in, it's going the other way. You know, price is always channeling back and forth, back and forth. In the morning on the range chart, you see it real good. Okay, so Owen just took 5 points out of this move. He chose to take his points. So it's gone back to being like a break even at the moment. But all the conditions are in place for a move lower. We're below the BBC. We got red and falling overhead. Now we are above the 50-yard line, but look how we've turned red and hooked like we want to cross. When this thing crosses that 50, sometimes this thing will really giddy up and go. Okay. Gotta keep moving. So cover the Dow. Let's do the Russell. All right, last night's signal on the Russell was to be long 1548. Important prices, important areas. See that? 1548. What was the swing low here? 48.1. This one missed getting below the trigger by 2 ticks. So we triggered at 1548 and made it up to 1565. So that would be 17 points at $50 a point. But again, that's a swing high. And unless you've got a zone or some reason to get out, you don't know this is the swing high till much later. Your exit signal is right there. Closing price of that candle, 1556.40. Okay. Now, the entry was to be long 1548. So we're going to go closing price of this candle is, sorry, 1556. Not bad. Okay. So price, the entry here, 1548, swing high, exit signal. This is the market's way of telling you, hey, you may not want to be long this position anymore. You may want to take whatever profits you have. So the exit signal is 1556, 1556 minus 1548. It's 8 points. At $50 a point, it's $400 per contract traded. Not easy, but it can be this simple. You just need somebody to teach you a few things. Now, this pullback, we didn't quite get below the trigger. We have gotten below the trigger here, but my concern is if you were to try to go long again here, and we would never go long on a red candle. But let's say the next candle starts to print green. As we push up, as we hit that BBC, that should be good resistance. See how when price moves up to the BBC from below, it's resistance, resistance. And then when it pulls back to it from above, it's support. Are you asking that question for Owen, Tim? Oh, and on your trade, Tim was curious how you ran your stops, which feel free to share if you want or not. He asked, so I just threw it out. All right, so we're going with the Russell. I have a conference call coming up, so let me jump to Crude so we get everything done. What a beautiful move in Crude, right up to last week's zone. Now, last night on Crude, we said to consider being short at 33.90. Sell. Come on. Sell. 33.90. Okay, and swing low. 33.64. That needs a decimal point in it. Barrel of oil, $33.90. So 90 minus 64. 90 minus 64. 26. So $260 per contract move. Okay. Now, obviously this was not an extended move, so there is no exit signal. Because the thing, it made some money available. You can take it or you cannot take it. You just have to be okay with whichever decision you make, no matter how it turns out. It's just another trade. Now, the long side concierge for Crude was 36.90, which we have not reached yet. However, there were Logic 247 alerts coming down and going back up. Now again, the long side, you should write it down because it might actually trigger. Long 36.90. Okay. 36.90 to 37.50, that would be a nice window of opportunity. If it triggers. But, something that you'll understand over time. Look how long it's been since we pulled back to the BBC. Trees don't grow to the sky. At some point, ET is going to want to go home, recharge his batteries at the BBC, and then maybe give you another leg. So the next trade here might not be that. It might be price pulls back to the BBC, and then we have a chance to get long again, right back up to this beautiful target at 36.75. And whichever way it washes out, I don't care. The money's the same, whether I take it from here to here or from here to here. From here to here is more money, but I'm happy with whatever the market offers. Okay. All right. NQ. Okay. All right. Globex opened last night right here. This was the opening candle of Globex. In the NQ, we wanted to be long above 11,205. $11,205. Okay. Not an extended move, so you don't have the option of using the exit signal. You have to make a decision. So what did we hit? 281. So 281, let's call it 70 points. Okay. It's a $1,400 per contract move NQ pays $20 a point. Now, 11,205 was the trigger. The swing high here was 1211 and a half. So that would have been 6 points at $20 a point, 120 bucks. Basically the same here, 6 points, 120 bucks. The short side for the NQ Concierge Alert, 109.06. We haven't gotten there yet. We've had some logic alerts get there, but the Concierge has not. So you might want to make a note. 109.06. Okay. All right, next, gold. Last night's Concierge Alert on gold to be long 1884. Now the open Goldbeck's open. Yesterday was November the 1st. Oh, I got to change the time. I'm not going to take the time to change the time, but that's the opening candle. Okay. And that said be long above 1884, which was right here. Important prices, important areas, almost always tested. 1884 took us up to 86. That's $200 per contract. We got back below the trigger, and then we caught the move. Right? Put it a swing high at 96. So from 84 to 96 is 12 points at $100 per contract. That's $1,200 per contract traded. Guys, I got to put you on hold for just 1 second. I'll be right back. So something, I just got a message here. Stand by. Be right back. Go take a break. 5-minute break. I'll see you back in 5 minutes. All right, guys, sorry, but I had to take that. Did we figure this one out yet? We ran from the entry. Published entry was gold 1884, and we ran to 94,000 bucks per contract. Or you could have gotten out anywhere along the way. Okay, Tim. Gotcha. Oh, and Tim, Owen answered you back. He used a 1 minute chart to set his stop at 32.88 on that trade. Okay. All right. So what's next? We got one more left, I said, guys. Silver. Consider being long 23.78. $23.78. 23.78. The first move up fixed to 24.09. 23.78. If it goes to 24.78, that's $5 grand. Obviously, it didn't go that far. Think about it this way. When the price of silver changes by 2 pennies, in other words, when it goes from 23.80 to 23.82, it's the 2 penny move, it's $100 per contract. If it moves a whole dollar, it's $5 grand. So you had the alert, beautiful trade, pull back to the BBC. See, now this is an opportunity you just find yourself, okay? And you might be looking, you might be saying, I believe Dwayne would draw a little window of opportunity right there to go long. I believe he wants to get long just above that swing high, and I believe he wants to get out just below that swing low. You're reading my mind. Okay. I don't have time to publish that right now, but there it is. Okay. Where does that leave me? Now, this is another interesting characteristics of important prices and important areas. We got into the window. The swing low was 75. Okay. And we also talked about entering on a break of that low. So it's possible someone may have entered sooner. So now we're just sitting here at the top of the window. That's just to aggravate you. Sometimes it'll rip right through. Other times it'll do this. So something you also have to learn to become a trader is patience. And for some people, that's a real issue. I want what I want and I want it now. Doesn't work that way. Okay. Now, once you learn the strategy, it can work that way, because anytime, day or night, you can come and fire up your charts and just go look at each market until you find one that's got an opportunity. Trade it, done for the day. If you consider yourself an S&P trader, or a gold trader, or a crude trader, the strategy we teach you works across all markets. So over time, you'll realize it's kind of unrealistic to rule out all those other opportunities just because you got an S&P tattoo. Is it still doing it what we would think it would do? Is everything still? Is there any reason to get out of this trade? Well, I'd really like to see price test this low. If we take out that low, we should see the bottom of the window. If we struggle here, then you might be out there with, whatever profit you have in based upon where you took your entry. Okay? All right. Good word for the day. I'm going to tell you a story of two families. Genesis 18:19. I have chosen him to teach his family to obey me forever. Genesis 18:19. The story of these two families, told over a century ago, contains lessons that are more relevant now than ever. Family number one. Did you know that the father of acclaimed New England reformer and pastor Jonathan Edwards was a clergyman, and his mother was the descendant of a minister? In fact, Edwards' family includes 14 college presidents, more than 100 university professors, 100 lawyers, 30 judges, 60 physicians, over 100 clergymen, missionaries, and theology professors, and some 60 authors. Wow. Throughout history, there's scarcely been a great American industry that hasn't featured an Edwards family member among its chief promoters. Such was the product of one Christian family reared under the most favorable conditions. Family number two is probably more like our family. Of the infamous Jukes family, couldn't be made to study. They refused to work and are reputed to have cost the state of New York millions of dollars. Their entire record is one of pauperism, crime, and insanity. From among their descendants, 310 were professional paupers, 440 were physically wrecked by their own wickedness, 60 were habitual thieves, 133 were convicted criminals, and 55 were victims of impurity. Only 20 actually learned a trade, and 10 of those learned it in prison, and this notorious family produced 7 murderers. The fact is, if Dennis becomes a menace, he can poison the stream. But if he's raised to be godly, he can bless an entire family, as well as influence the world for generations to come. So, what's the bottom line here? Simply this. As a parent, if you're wise, you'll seek God's guidance every single day of your life. Let him do the work. Just let him use you. If you listen, he'll talk to you. But then you've got to put your body in motion. So anyway, that's our good word for the day. Great start to the week. Couldn't imagine it any better. If you are not yet a member, a family member here at CFRN, there is a way to fix that. And we'll show you how you do it. You go to this website, eminifuturestrading.com. eminifuturestrading.com. Everything a trader needs, $97 a week. All the zones, all the alerts, all the hours of training, the 24/7 support, the discussion groups where you get to talk to all of our traders. Now, a lifetime passport costs $5,000. If you just want to go lifetime, you can. Or if you want to, and we just recently did this because of the pandemic crisis, because people are hurting. So we've never offered a weekly thing here until just recently. So you can pay $97 a week until you're convinced that this actually is the real deal. And then you can purchase a lifetime passport. Who knows, you might even purchase it with the profits you earned from your weekly subscription. Entirely up to you. Everything is explained in great detail on this page. But all the trades that I showed you today from last night and the dollar value produced per contract, I mean, it doesn't even really seem realistic that anybody would let you have that for $97 a week, right? That's what I said. Then Valerie punched me and I said, okay, all right. No, seriously. This is our way. We're not going to do this forever, but we're going to do it while everybody's in this economic stranglehold. So go there, get signed up. Valerie will set you up with your charts and the indicators and all the links you need in the Telegram, the discussion group, and all the passwords, and you'll be trading with us tonight on a demo or simulator account when Globex opens. If you go here right now, if you got questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.